And we are live. We're live. Welcome on your TV sets in Texas and Louisiana. You're watching on the Smart Money Culture TV network, as well as joining from around the world on X and LinkedIn and YouTube and all of the rest. It is a beautiful day here in the District of Columbia. We're actually beautiful weather. Hit the golf course for a little bit yesterday. Really nice out. Really, really nice out. I'm going to try to play golf every day. I say this all the time. Once the kids are back in school, maybe I'll start to play golf every day. I love playing golf. Do you like playing golf? Golf is a lot of fun. Interesting day, of course, that we have today. I'll tell you what, this political situation is unbelievable, isn't it? It really is quite crazy what is going on. Of course, we have the great Donald Trump, President Trump. Maybe he may be going to jail, or a lot of people are saying he's not going to go to jail. I could see it going either way. I don't know. We'll see. That's going to be sentencing next. I mean, it's all kangaroo court anyway. Let's face it. Good morning to you. Always nice to see you. How's it out there in California? Did you see our interview yesterday with the Polka Gold guys? He was out there in California too. I love California. California's beautiful. People talk about, oh yeah, we just annexed California, get rid of the problem there. I'm like, California's nice. What do you mean? We don't want to get rid of California. California's nice. We want California. Now, if we want to remove some people or something like that, we can talk about that. But getting rid of California? No. California is one of the nicest states out there. That's why, and huge economy as well. Big economy in California. I think it's like, again, we were talking about it on the show yesterday. I think it's like the 7th largest economy in the world. Yes, I mean the beaches. You got the beaches. You got the California girls. You got, I mean, it's just, it's great. California is beautiful. The weather is unbelievable. It is. It's like so good. So we have so today's financial pulse is on the Impact Money Show. Yosemite, yes, Yosemite. A lot of I love it. I mean, I was going out there during COVID. I was joking about it yesterday. I actually, before COVID, I was going out there. I was going out there once a month for a while. I had some clients out there, and then during COVID, that continued, and it was pretty interesting place during COVID. That was some serious. What do you call it? Police state stuff there, but. I mean, I guess it was like that everywhere for a while. So I got some exciting things going on today as well. Of course, I've been working on getting together our membership site, the Impact Money Show, so people can start trading with us. We've been doing pretty well. Of course, Matt Dixon and I have been doing well for quite a long time trading. And I feel like that is, I know that that's something that you want to be a part of. That is something that a lot of you are going to want to be a part of. It can be life-changing. Absolutely life-changing. So I'm talking to my guys I'm going to hopefully contract with today. So Powell's Jackson Hole speech is on Friday. Pretty interesting run yesterday. You had, of course, they adjusted the jobs numbers. Now it's just kind of like, I mean, I saw that coming. I mean, everyone saw that coming. I don't even know if they included, but I mean, a lot of those jobs that came out, they were like government jobs or whatever. Government doesn't create jobs. You know what I mean? The government, I mean, it does in a sense, but they're not jobs that do anything except cost us money. They don't produce anything. And so that's something that they like to fudge the numbers. But I mean, by all appearances, they just fudge the heck out of the numbers. I mean, that's what it looks like, right? That's it, man. They fudge the numbers big time. About 1 million jobs. So that came out, and of course that had a bit of a chiller on the markets, but it was kind of like everybody was scared about the FOMC, but it was only the FOMC meeting minutes, which actually the truth is that Jerome Powell was not really dovish in the meeting. He came out afterwards, this was last month, and was more dovish, but in the meeting he wasn't really that dovish. And so, these people, they don't do anything by accident. So probably that was on purpose, so that the meeting minutes came out a certain way and everything like that. And then he came out later. Oh no. So interest rates pretty much nailed on. We're going to get probably 25 basis point interest rate reduction. That's 0.25% for the layman next month. Some people are saying 50 basis points, which would be 0.5%. I don't think so. And then there's lots of talk about nothing happening after that. But it is a election year, and that's what I've said over and over again. We've said it for months now, that they're going to lower the interest rates and try to make the economy better. You can see oil right now is down. Oil is down almost at $70 a barrel. So it was trading upper 70s. It did go into the 80s for basically the entire year that we've been doing the show. And now it's, of course, they're bringing the price down. So they want to make sure. Now, it takes a while. Prices go up very quickly. When the cost of a barrel of oil are high, the cost at the pump goes up very high. When it comes down, it takes a while, of course, for the cost at the fuel pump to come down. So, but you'll start to see that. You probably already have. Around here in DC, you can get gas around $3 or so, maybe $3.50. But it was up there like $5, above $5 there for a little while. So that is a considerable move, and that's that's all pretty pre-planned. It is interesting. I mean, you have a lot of people blame the Democrats for the economy, and of course the Democrats don't help the economy, but really the monetary policy and the inflation and everything else, doesn't matter who we get in. All that stuff is central banking cartel controlled. The Federal Reserve controls that monetary policy. Of course, they can get pressure from the current administration, and yeah, sure, they can react. And then as well, if we have optimism, if there's optimism in the market, markets are emotional. So if people are optimistic about what the future is, and they're producing more, and the economy is better, then of course, by default, the central banking cartel, the ones who mint the money, are a bit easier to influence, I would say, right? So, but either way, doesn't matter who we get in, nothing really changes. They keep producing the money. For every 100 billion that they print, which they don't even have the money. They don't have the money. They're way past having the money. Okay. So when they print the money, they're just giving it to the government or whoever. And they're going to take that value from you and me from inflation. That's it. And they earn 3 to 5% every time they do it. Biggest scam in the history of the world. I play a video every once in a while and talk about it. When I talk about it, it's one thing. Of course, I think people get it. But when I play a video and I show, I think that it a lot of times that makes it sink into people even more. So either way, doesn't matter really who we get in. We end up with inflation. Sometimes it's worse than others. And interest rates, high interest rates, low interest rates. As a matter of fact, I think it was in the 80s, we had interest rates at like 15 or 17%. It's actually unfathomable at this point. Unfathomable. But for every 100 billion that they print up, they get to keep 3 to 5 billion. I mean, it's a lot of money. It's a lot. And the U.S., we currently owe the central banking cartel, the Federal Reserve, $35 trillion for borrowing money that they're not even really lending us. It's their scam. They just print us the paper money, or they just digitally give it to us. It's actually their taxing scam. That's what it is. It's a monetary scam. It's a taxing scam. So that they convinced Woodrow Wilson way back in the day. They said, look, Where you will never default on anything. We'll always pay your bills. We'll fund all your little pet projects. And now Woodrow Wilson has a big bridge right here and right, connecting Virginia to Maryland, right across the way. The Woodrow Wilson Bridge. You got the Woodrow Wilson Bridge. Guy sold us out. So the central bankers got behind him, and they pushed through his election, and then he pushed through the Federal Reserve Act. But they said, look, everything's going to be fine. We'll pay for everything. We'll pay for all the pet projects. You'll never default on anything. It'll be fine. And they put it through. And whether they told them or not, but the reason it's fine is because they have then, once they passed it, the unfeathered access, the unfeathered ability to tax you as much as they want. Well, if you could tax 330 million people as much as you want, would you go broke? No, of course not. So the more money that we spend, the more money you get taxed. Always look at how much money the government is spending, and that's really what your real tax rate is. And then you see this now, Kamala and now Biden has endorsed the plan to for a 45% capital gains tax. 45%. I talked about this on my X feed, Networks Manager, yesterday. 45%. So what that tells me, so here's the way it works. The amount of interest that is owed to the central bank each year just happens to be the exact amount of money that is collected in the federal income taxes. Every year it's the same number. So last year was $1.6 trillion. And to give you an idea of how much money $35 trillion is, in the entire year last year, the U.S. government used a little over $6 trillion. So that's how much money $35 trillion is, just so you understand. So the interest payment on the 30, whatever it was at the end of last year, 30 trillion, 26 trillion, I don't remember, was $1.6 trillion, and that's what they collected in the income tax. So what they're trying to do with this 45% capital gains tax, it's clear to me anyway, they're going to pump the markets to infinity. Bankers are going to make a lot of money. The rich are going to make a lot of money. Bankers are going to make a lot of money because they're making more paper money, right? And then again, they make 3 to 5% every time they print that up. The rich are going to make a lot more money because, of course, they're in the markets and inflation is going to go through the roof. So all of their assets are going to be more. Their homes are going to be worth more. Everything's worth more. If you've noticed, cars don't really depreciate anymore, right? It's because your dollar is going. Because the dollar is going down. So the plan is to have people make so much capital gains tax, have to pay so much capital gains tax that they are able to pay the probably 2.5 trillion or whatever. I don't know what it would be. I'll have to look. Of interest payment to the Federal Reserve. And that's the way it works, man. That's the scam. That's the scam. That's the scam. And that's why they want to raise it so high and so aggressively. I mean, that's almost double what it is right now. It's unbelievable. It's unbelievable. It's unbelievable. And that's why, another reason why I'm very worried about Trump actually getting in, because how in the world are they going to put Trump in office when he's going to lower taxes and we owe the Federal Reserve more this year than we did for 2023? And that's probably why he was almost assassinated. And right. If you look in depth, and I won't do it today, but if you look in depth at the JFK assassination, it's the same group of people. All roads lead to the same group of people. They all lead to the same group of people. Anyway, I think we're going to have another great day in the markets today. That's what I think. I think we're going to see a long push up. I'll tell you what, my friends over at Algorand and Polka Gold, man, we're killing it. Oh, man, it's pretty nice. So we really got we really got a nice push there. Let me just make a note of this. We got a nice push on the Algorand and Polka Gold and Dalgo. Dalgo went up like 30%. And P Gold, the P Gold. Now, if you want to join, if you want to buy P Gold and Algorand, Dalgo, you have to go through the decentralized exchanges at the moment. But you can just go, you can click Bitcoin at cost Bitcoin. Now what I'll do is I'll go over here and under my post, it's if you're watching on YouTube, you'll see the link at cost Bitcoin. Just click that link and then and that'll forward you to CoinStore with my referral ID. Let me just post here. Boom, boom, boom. Buy gold, silver, buy crypto, UTC, P Gold, eVay. Of course, eVay is now on CoinStore. eVay is the ratings platform that we use to make a lot of the calls that we make. Buy Bitcoin. Join the monetary revolution. It's a peaceful revolution. It's the only way I get away with this stuff. It's a peaceful revolution, folks. Join the monetary revolution. All right, so I just posted those links below. So Polka Gold is just like I said was going to happen. This thing is on an absolute tear. And of course, Dalgo, and a lot of people are like, oh, yeah, Dalgo might come up slower. Nah, I don't think so, guys. Dalgo, you got to look at the market caps, okay? So if you have a market cap of a smaller amount and you're able to get in that early, of course, you can get a bigger piece of the pie. So let's see here. Polka Gold up again today, looking real pretty. Let me share my screen here real quick. We should push back up. We had a bit of a dip, but we should push back up over 1 million here, maybe today. Probably should today. We'll see how the markets go. We had some nice entries yesterday. If you haven't gotten some of these, and of course, guys, not financial advice. I get paid to do this stuff, okay? Everything I talk about, you should just figure I get paid to do it. And I'm long and all those things, okay? And full disclosure. But this one is really, really nice. One of the reasons why I support this one, and I've said it multiple times, is because all the liquidity is locked. So Algorand goes on a big run, right? Algorand goes on a big run, and what happens? Polka Gold goes on a big run too. Why? Because the liquidity is locked. It's locked in smart contracts. It's locked. It's like basically burned. Not basically, it is, I think, burned. Like you can't, it's there. So Algorand should triple at least. I've been saying that since it was 10 cents. It's about 13, 14. Let's see, what's that? It's had 2 5% moves. And this is like $1 billion market cap Algorand. So when it has a 5% move, that is considerable. So that's Polka Gold up nearly 5% today. Dalgo did move back a little. I didn't really move back. Actually, it's still up. But if you look at it exactly, had a nice move yesterday. I expect this to continue, folks. Here's the Dalgo. Dalgo Nation. That's a good one, guys. I love the Dalgo. I love the P Gold. Like I always say, I like for you to have a good way in. I like for you to have a good way out. Now, one of the things I like to show everybody on this here is Dalgo. All right. This is the Dalgo chart here. But if you look right over here, market cap's 225, TVL, which is total I'm liquidity locked, basically. Total value locked, I guess. It's early. I'm blanking on that. So the market cap is 225, but we have lock liquidity here of 291, 9,000, and 33,000. So well over. I mean, just these three numbers here, you're sitting at 320, 330, and that's one of the reasons why I'm so 330 in locked value with a market cap of 225. I mean, you can do the math here, guys. Okay, hopefully, like those numbers are just crazy. Those numbers are crazy, guys. Let me go out in a bigger view here. This is the Dalgo Peak Gold. Yeah, all right, that's what I want. Go to the daily. Get a better view here. See, here we go. Boom. So look, we're still. I mean, we launched right around this number here. Boom. We retraced. Of course, market conditions were a little rough, and now you can see nice push back. This should just boom. Okay, not financial advice and all that jazz. So that's Dalgo. I love the Dalgo, and you can stake the Dalgo and get like 15% or something like that annual farming rate or annual yield rate. Then we have the Polka Gold. Polka Gold up beautifully. This is the daily on them. I think the 4-hour chart looked good on this one. Yeah, there we go. See, we dipped, and then now we're on our way up here. But again, here we have market cap of about 900,000, 898. And then we have, I'll just make this a little bigger here. And then we have the lock liquidity here. Okay, we have about 300,000 in the Dalgo P Gold pool. This is lock liquidity, and another 400, so 700,000. So those numbers are just crazy. I mean, a lot of times on a million market cap, you might have 90,000 or 100,000 or 75,000 or 200,000 in liquidity. These are very liquid assets. Very liquid assets. And that's what I like for you guys to have. And that's one of the reasons why I'm a big proponent. That's how I talk about it every day. All right, let's talk about the markets. I have the great Matt Dixon. Matt Dixon, of course, as you know, if you watch the show, he is in Albany this week. He's been picked up now by another TV something. He's doing some TV stuff. And I think it has to do with their EVE launch. But he sent me a recording. So let's see what he says about the markets.
Bruce, and good morning, Impact Money viewers. So apologies, can't be with you live again today.
You need to turn this part up.
With activities, interviews, and so on in Tirana in Albania. Amazing place, as I said. But we'll just do a quick roundup of the markets today and hopefully come back in more depth tomorrow. We'll start with Bitcoin, of course. We've been saying for some time now that we've been in a consolidation, sideways consolidation, which is very clear when we look at the charts here. We can actually see there is actually a 5-wave move to the upside here, giving us a larger wave 1. And then we have what looks like a WXY correction working out to the downside. And we can continue to move these labels around a little bit because a correction is quite uncertain. It can be very, very complex. And we can see here with all the zigzags and overlapping nature of this, it is a corrective pattern. In contrast to this impulsive pattern here, where there's no overlap, basically we had a wave 1 up to here, wave 2 down, 3 up, 4 down, 5 up. There's actually no overlap of those waves, and that's important. That is the way it has to be for an impulse. If you have overlap, it's not an impulsive wave. There's a couple of exceptions, but they're very specific exceptions that we can rule out here. So we have a clear wave 1 impulse to the upside. It can even be a wave A, wave 1 or wave A, but either way, it's an impulse. And then we have a correction, which is either wave 2 or wave B. The fact that we had in the longer term, I think we've actually completed what's called a triangle correction here, which is an ABCDE correction where the E is overshot the trend line here, which is allowable. Then that's either itself is actually a wave 4 or a wave B. It can't be a wave 2 because triangles are not allowed to occur in the wave 2 position. And so it's a wave 4 or a wave B. And I suspect this is a wave 4. And so we're now heading up gradually in wave 5, which is an impulsive wave, should take us to new all-time highs for Bitcoin. So we've been saying that patience is the order of the day, and clearly it is, because this sideways move is just continuing. We're not actually breaking above or below this consolidation pattern. And by consolidation, it just means that the price is actually going nowhere. It's just dipping up and down and zigzagging here. So we may potentially have completed the correction down here. So wave 2 could be potentially here, or it could be more complex, and it actually looks as though it is going to be more complex. So with the WX and maybe a further Y wave down, but be prepared to be surprised when you're talking about a correction. Corrections are uncertain, and that's why I would never say for certain that this is a WX and a Y down to come. That would mean I'd be waiting to go into long positions down here. You can't afford to do that with corrections because there is some degree, serious degree of uncertainty with how far the correction will go down. And so we have to assume the worst, as it were, that the correction is complete here, and we start to dollar cost average here. And then if price comes down, we would dollar cost average further. But if it doesn't, and it actually continues higher, which is a possibility, then we already have some position here because we dollar cost averaged in at this level here. But what we're trying to do, our objective is to buy the dips and obviously sell the peaks. So at the moment, we've been buying dips because this was a clear impulsive wave 1 up. This is a clear correction down. It was in 3 waves down, and so we can buy the dip here, with the possibility and the reasonable probability that it was complete here, but it's only a possibility. It's not an actual certainty, and so that's why we dollar cost average. Just put some of our asset in here at this level, and then, as I say, if it dips low, we buy in more. But with a reasonable confidence, and I'd say a high degree of confidence, that Bitcoin is actually going to go higher because we have this impulse higher, correction down. We should then get quite an extensive and powerful impulse higher. So I'm not quite sure what's going to cause that. As I said, there's I think Fed Chair Powell is speaking tomorrow, and it could be that he's dovish with his commentary there, and that could actually push us quite a bit higher. So last night we got much of the same with the I think there's FOMC minutes were pretty much as expected. A little bit of a softening of the tone, a bit more dovish than in previous occasions, and so that was slightly positive for markets. And we saw a bit of a pull up yesterday. So when we look, we'll see actually on Solana, because we commented specifically on the price on Solana yesterday, and it's gone up a little bit since then. So as I say, expecting new all-time highs to come. You can see that I pushed here to, 80. Well, the first target for me would be probably 84,000-ish. Would be the first target to the upside. We could go way beyond that. I mean, if we got a 1.618 extension, that actually already takes us with a small wave 3 here in a smaller fractal. So remember, this is a big wave 4. This triangle is a large wave 4. And then we're moving up on a smaller cycle in a 1, 2, 3, 4, 5 from there. So that's a large wave 4. We're going to work on a large wave 5, which itself is made up of these smaller 1, 2, 3, 4, 5 in blue. So wave 3 will be expected to take us to at least 78,000 on Bitcoin. Then we get a small correction, wave 4 sideways, and a further wave 5 up. So that's a possibility, but we could go way beyond that because, as I said, if we with cryptocurrency, they tend to be a lot more aggressive than traditional financial instruments. And so 2.618 would not be uncommon at all. 2.618 would take us to 91,000, and we can go beyond that. And we've covered this before, but basically, I think we are expecting, once wave 2 is confirmed complete, we're expecting a really powerful wave 3 to the upside. And we could even get a powerful wave 5 as well. So the sky's the limit really with Bitcoin at the moment. And I think this is just a buy opportunity. As I say, DCA, and we can buy the dips if it drops any further. So that kind of summarizes Bitcoin, where we're going. I'm really bullish on Bitcoin. I think it's got a long way to go, but I'm actually pretty bullish across the board. So if we were to look at Ethereum, we have the same sort of consolidation pattern here. Again, you can see a lot of overlapping. It's actually going nowhere from this minor peak here. We've been chopping pretty well sideways. And I think in line with Bitcoin, I think Ethereum is going to head quite a bit higher in the not too distant future. So I'm not quite sure what we're waiting for to give us that impulse. Maybe it is the commentary on Friday. Maybe there's other economic news we're going to get. Maybe jobs. Maybe I'm not sure what it might be. But as we've said so many times, it's actually the charts that tell us the way, and we wait for the news to fit in to actually give us the reason for the movement. So the charts are remarkably accurate and predictive, and we can predict these prices really well. And talking of prediction, we've done very, very well with gold recently. Again, not on these particular time frames, I think it's on the daily. We showed some divergences yesterday, which were extremely accurate and gave us the precise point of a downturn. A little bit of a turn down in gold. That's what we've had, a bit of a turn down. But you can see that the trend is still higher, and they say that the trend is your friend. This is one of the traders' favorite little sayings: trend is your friend. And whilst the trend is higher, don't bet against the trend, and also don't try to catch a falling knife if things start to move down rapidly. But for the time being, trend is higher. I wouldn't look to chase markets higher when we're at a peak like this. Is not necessarily the right time to come in. So as I said with Bitcoin, it's exactly the same story. We look to buy dips. We don't look to buy peaks in the market, because then you're looking for a brand new all-time high if you buy a peak. Whereas if you buy a dip, you've already had a pullback. You're expecting probably some retracement higher. But we look at the actual structure of the wave count to tell us whether we're likely to push higher. But as I say, I wouldn't be chasing prices higher here, although I do expect longer term we are going to see quite a bit higher on gold. So again, if I zoom out a little bit, we can start to see, in fact, the more I zoom out, the more positive the gold picture looks, to be honest. Yeah, I can zoom out even more, way more than that, but it's looking quite bullish. Even from here, this wave 4 in blue, we've got a wave 1 up, 2 down, 3 up, potentially finished there. We've got maybe a bit of a wave 4 down and a 5 up. That's just on that scale. We actually have a bigger scale as well we're looking at with gold. So gold is looking really bullish long term, but short term I do expect a bit of a pullback. I'm just going to jump over to Solana because it's one we touched on yesterday. I'll go back into a shorter time frame here, go to the 4 hour just to show us where we're at. Once again, it's a little bit like Bitcoin in a lot of ways. We had a 5-wave move up again, so that's the same. We've got this corrective move down. And once again, the correction could have been complete down here, or we could actually complete further down. But yesterday, we were looking at a price of almost exactly 142, 141.90, and so on, 142. So we're a whole dollar higher than that right now. We can see this little green candle here. So whether we move up directly from here or whether we push down a bit further and then move up, I'm confident once again that we're going to see the same sort of picture for Solana, that I'm very bullish with that. So just again to clarify, we do have an impulsive wave higher here in 5 waves, and we do have a very corrective sideways move here. And this is kind of a bull flag kind of scenario where this is the flagpole here, and this is the flag waving in the wind here. And these are continuation patterns, which means that there's going to be a continuation of the trend. The trend is upwards with this impulsive wave here. So once this is complete, and as I say, these corrections are really uncertain. There's a lot of variability within them. There's actually more types of correction than impulsive wave. So with corrections, you can have, from Elliott wave terms, what's called a flat correction, which is 3 waves, then 5 waves. That's called a flat correction. But even within the flat family of corrections, there are actually a number of different kinds of flats, about expanded flats, regular flats, etc., etc. There's lots of different flat corrections. You can then have zigzag corrections, which are 5 waves, 3 waves, 5 waves. That's called a zigzag. And again, you can get different types of zigzags as well. And then you can have double zigzags, you can have double corrections, which are WXY. You can have triple corrections, WXYXZ. And then you can have triangles. There's so many different possibilities with corrections that it's almost impossible. So what we tend to rely on are Fibonacci retracements. So whilst we can't read the individual waves very often, it's quite difficult to determine what the actual wave structure is. We can see it's a correction because they're overlapping. And what we then do is look at Fibonacci retracements to see how far it's likely to retrace. So for example, if this is a wave 1 higher, I've got it 1, 2, 3, 4, 5, making a larger wave 1, then the correction would normally go to at least 50%, which hasn't quite reached as yet. 50% is here. So I've measured from the bottom of this move to the very top of this move as 100%. And then we look for a 50% being the minimum sort of move. And is actually the 61.8%. So you measure this the other way around. So the first retracement, that's 100%. And basically moving down, this is actually 38.2, 50%, then 61.8. These are important Fibonacci numbers. So this is why I've got the dotted line in here. That's a reasonable expectation. But as I say, we could end at the 50%, which we've already achieved 50%, by the way. We've already achieved 50% retracement with this move down. That's why this correction could be complete here, because we have achieved what I would say is a minimum expectation for a wave 2 down, but we could still get potentially extension of this correction. We could extend further down. And then the next target for me would be the 61.8, which is this red dotted line. But I'm not prepared to wait for a position to get a position in Solana there. That's why I've already jumped into position, DCA'd around here. I've actually added to my position around here. And if it drops further, I'll probably add some more at these lower levels here and continue to add, really, because as I say, I'm reasonably confident that we have an impulse higher and a correction down. So it's looking really, it's looking really constructive as far as Solana goes. I know there's been a bit of negative news. I think the Tron network is taking some of Solana's business effectively. There's obviously competition between the two. A lot of these chains do compete together, but I think Solana is, it's just come up now to 143, so it's looking really nice as far as I'm concerned. So you get these negative news things coming out. People, a lot of media people, they just want to create news just to create a story, but it's not necessarily true. I mean, it talks about massive sell-off of Solana. Well, that's not the case. It's just been a corrective move to the downside, and they give a reason for it. These reasons are not necessarily true. They're just saying a lot of the people are now building their projects on Tron rather than Solana. Well, there's always going to be competition between these networks, but Solana is a leading network, and I think it's got a long, long way to go, particularly bearing in mind the structure of the wave count here. I think we've got a lot of upside to come there. So we'll just jump around a little bit. We'll stay on crypto for the time being. We will look at XRP here again, just to confirm that we seem to be an impulsive high. This is corrective, sideways, kind of corrective. So at some point, even if we get further correction down, at some point, again, we expect the same story for XRP to continue to move higher there. Same story with Litecoin, really. We've got a good, powerful move to the upside with no overlap. And then we're getting this bit of a move down. Again, it may not be complete. It's hard to tell whether it's complete. So I think it's the same story. I think there's a lot higher still to come on Solana. Sorry, not on Solana, on Litecoin. Solana as well, of course, but on Litecoin here, there's still higher to go, but we're not sure whether the correction is complete. Some of the more aggressive ones that we look at, again, it's looking quite constructive here. I think there's obviously resistance here. So if I put a line in here, we can clearly see, I'll put horizontal line from around here. So we can see that it previously tested up to this level, and it almost tested again, and it tested yesterday to this level. I don't think that level will hold, but clearly it was resistant. So if you got in down here, and you could have done that using some of the Fibonacci measurements and divergences, etc., or even here, then a sensible take profit would have been the resistance that was here, because clearly, price didn't manage to get past this point previously, and it's going to be resistance again when we challenge it. I think that we will ultimately break through here. I'm very, very confident we will, and we'll probably retest it and then push to the upside. But ICP is actually looking really constructive here. I do think that we're going to break through this overhead resistance. And once you do that, the situation is there's a lot of stop losses here. So basically some people went short here. and they have a stop loss, which is basically a buy position to close their short position if price goes against them up here. So there's a lot of buy orders just above this dotted line in the form of stop losses, and they're buy orders, they're actually in the market. So when price gets above this dotted line, all those buy orders, the stop losses, are actually filled and exercised, and that actually gives the price a powerful pump then to the upside. And when you're aware of where people are placing their stop losses and their take profit orders, etc., and of course the market makers have absolute clear view of all this. They can see where your orders are. So that's why you're trading against somebody who can actually see your hand. It's like playing cards and poker, and they can see your hand. So it's very, very difficult to trade against these. So the more you understand about where people are positioned and why they're positioned in that way, the more clues it gives you as to where to place your trades. So as I say, I'm in really constructive ICP here. One of the exciting projects, both technically and from a price perspective, and Elliott Wave, etc., etc. I think there's a long way to go. So, as I say, I would be looking not to buy at this level here, but I would look basically if we break through, as I expect, powerfully, and then probably a retest of it, then I would look to buy with a stop loss below. But right now, it wouldn't necessarily be sensible because this is still overhead resistance. We might not break through it. And there's the place to place your stop loss here would actually be right below this lower point down here. So there's a long, big potential loss against your upside. Whereas if you push up and back down, then basically you can afford to have your stop loss just below this dotted line with lots of upside to come. So then your risk reward would be really attractive. And that's the way I'd look to play ICP in this particular situation. Again, we could look for divergences longer term. I'm sure there are. But so we've touched on a few of the cryptos. We'll probably just look at a couple of others that have been that are usually more exciting. So we're looking at Toncoin. I know Bruce is particularly keen on Toncoin. Again, it's looking very attractive here with the corrective nature. Again, we're beginning to see some overlapping already here. Not really going anywhere, going sideways at the moment. So at some point, I'm expecting powerful move higher on Toncoin. And of course, they're one of those competitive networks we talked about that people are looking to build their projects on. So you've got the likes of Solana. You've got lots of actual competitors there. Solana, Tron, Toncoin, many, many others. Ethereum is becoming less and less popular, but Ethereum obviously now has the support of being a regulated ETF. So Ethereum used to be nearly all projects were built on Ethereum. Of course, Bitcoin was the daddy of them all, and that was the first demonstration of blockchain technology. Ethereum came a bit later. It's still one of the big ones, and most projects were built on Ethereum, but now there's more and more competitors coming into the arena. So that's why Ethereum has perhaps not been quite as aggressive to the upside as we would expect. But I think the ETF gave it some good impetus. And we can see here that Ethereum is up just a little bit today, whereas a lot of tokens are actually down at the moment. Bitcoin is down 0.42%, whereas Ethereum is up a fraction. So, and Bitcoin, of course, was trailing, was ahead of Bitcoin. Bitcoin got quite a big pump, whereas Ethereum was lagging a little bit. I do think there'll probably be a little bit of catch up. But Bitcoin has got all that massive institutional backing. In fact, if you look at flows with the ETF, you can see massive inflows to Bitcoin, and very often you'll see negative flows on Ethereum. So clearly, when you look at the ETF side of things, the institutional side, people actually favor Bitcoin far more than Ethereum to have it as a long-term holding, probably within Bitcoin is a real store of value, and I don't think Ethereum is necessarily recognized as that real store of value. So we'll just have a quick look at DXY. I know we said that we're expecting further downside from this red line. That's precisely what's happened. And I think this will be followed through at some point with some buying in risk assets. So the fact that money is flowing out of the US dollar, there's a lot of reasons for that. Obviously, one of the big reasons was, as we mentioned yesterday, was the yen carry trade unwinding a week or so ago, and that caused a big dollar sell-off. But we are also seeing softening of the rhetoric around interest rates. We are seeing a softening of data, employment data, and I think there'll be some important data out tomorrow. So let's keep an eye on that and just see how the economy is going. But at the moment, the US economy is looking reasonably stable. We are seeing unemployment ticking up, and as I say, that is actually the first sign. And we saw the SARM rule, which there's a specific criteria for that, but it showed for the first time in some time that we're expecting recession to come. And the SARM rule has been very, very accurate in predicting recessions for the past 60 years or more. I think 65 years. The SARM rule has never been wrong in predicting a recession. And it actually flashed red just very recently, predicting recession for the US. So it'll be interesting to see if that one plays out. As I say, it's predicted recession every single occasion for the past 65 years. It has never been wrong. It's never given a false positive. So it'll just be really interesting to see if it's true again. If it is, then we'll see just yet another proof of that rule, effectively. So that's one to watch. S&P 500 has been, again, just followed our expectations perfectly. We said for a long time, this ABC was just a form of correction, and we're going to push with impulsive moves to the upside. I think we've got probably some way to go. I actually think that we could easily target the 6,000 level on the S&P 500. And there's some correlation, not precise, but some correlation between S&P, between stock markets, traditional markets, and cryptocurrencies. Particularly NASDAQ and Bitcoin are quite highly correlated, and we're seeing positive movement on NASDAQ as well. So I think that we're going to see substantially higher to basically as an impulse to take us beyond the top of the previous all-time high, which was where this ABC wave started. So we should move above there. So as I say, with some correlation, we should see some really positive movement. And that's what's going to drive Bitcoin, Ethereum, XRP, Litecoin, etc., to new all-time highs, I think. Or if not all-time highs, certainly to substantial highs. And we're seeing, actually, just flipping back to Solana again, it's absolutely roaring this morning. So just while I've been watching, it's up another $0.50. You can see that green candle increasing. So looking really positive on Solana. Oil is dipping even further. So I think this is really down to, it is a softening of the economy, most certainly. It just means that the demand for oil is going to be less and less. And so it's a combination of diminishing geopolitical tensions, particularly in the Middle East, but also in Russia, Ukraine. So a diminishing of these geopolitical tensions means that the supply of oil should be intact. But then also we have both the supply and the demand side, and the demand for oil is actually dropping a little bit because the economies are softening. And we're seeing interest rates, they're lowering interest rates around the world now in response to that softening of the economic data. And so that's why I think we're seeing the oil price dropping. I mean, it's been quite a drop. You know, it wasn't long ago at all, we were at $84, we're now $71. And in percentage terms, I mean, it's only a month ago, basically, we were at $84 in July, and now August, we're at $71. In percentage terms, that's massive. And I think potentially we have further to go. So this is, in some ways, is good for business because basically if oil prices are lower, it just means the cost of energy is that much lower. So it actually means inflation is potentially coming down. Oil prices and energy prices are a big driver for inflation because it's one of the main expenses that business has for production, for manufacturing, for transport, but also even for individuals, you know, for house and for transport, etc. So energy is a very, very important component that can drive inflation. Even food production actually relies a lot on energy. And so virtually everything we do relies on energy. So if energy prices are coming down, it's probably a good thing for inflation. Means that inflation will probably continue. And that's probably what the Fed are seeing when they're discussing this. They're probably seeing that the pressures for inflation are coming down. And this is why they're talking now that there is almost certainty that we're going to see 25 basis point cut in September. So we're only about a month away now from that rate decision. And that should help give the markets a boost and maybe give us that October that Bruce is talking about with the markets. So let's hope so. So I'm going to just round up for today now. Just look at a couple of the memes. Well, Doge is no longer really a meme, but pretty flat for the day. Bonk is actually up a little bit, quite nicely. Book of memes, wherever that's gone, I can't find book of memes at the minute. There it is, book of memes, actually virtually flat, down 0.45%. That's flat effectively. So the market's pretty flat today. I think that we are expecting more upside to come. Again, do take a look at eBay.io. The ratings are available free on there, the actual basic ratings, which, as I say, I use them to lessen my workload, actually identify tokens which I think have promise, or even tokens which actually look as though they're going to have some downside. And then I'll do my due diligence, like I'm showing you today, to actually look at whether those tokens are going to go up or down. So I find it a really useful tool. I think you will. And the fact is it doesn't have to cost you anything. But there are subscriptions there for higher level data and so on. And the token itself, the eBay token, is available now on CoinStore. So do go and check out CoinStore. I think the links were given yesterday, and we're going to give a lot more information about that perhaps tomorrow. So again, thank you so much for listening. Hope that's been helpful to everybody. Thank you, Bruce, and look forward to catching up tomorrow.
Well, there you have it, guys. The great Matt Dixon. Matt Dixon making the moves. Yeah, man. Just looking over here. What's up? The bull run. The bull run. I love the bull runs. So easy to make money trading in bull run. It's actually easy to make money trading when it's going down as well. It's almost easier, actually, but it's not as fun. It's not as fun. Oh, making money is fun. Good to see you on here. Yeah, well, there you have it. I mean, pretty, the charts are all saying that we're going up. And so a lot of times, and Matt mentioned it there, you don't know exactly what the catalyst is going to be. You just know that the charts are saying we are due for an upside. And so that's what we're looking at. It was timed interestingly yesterday with when they changed the numbers of the jobs that were added. And I felt like that was in order to keep the markets from just going crazy. They adjusted those numbers yesterday in order to do that. It's not good for the Fed doesn't really want the markets to go crazy, because then there's more dollars, there's more value in there, and they're trying to print more dollars. That's their gig, right? They make more money. They don't make money. They don't make more money by getting it by having more of it flying around, having more of it diluted. Well, it depends if they print it, right? So anyway, they don't want the markets to go up. Job reports comes out, there's a little bit of damper on it, but I mean, there's really no way to keep this bull down. I think famous last words, right? I wouldn't say no way. I wouldn't say no way. That's for sure. Verified first. Yeah. So, well, we'll see. But the S&P 500, the other, I mean, everything just looks pretty primed for the big run here. We should have an impulsive move upward. We had an impulsive move yesterday, but a good 10% move, I think, is in order. I think it's in order. Of course, one of the coins that I am supporting quite heavily on the TON network. We talked about TON network. So TON is built by the guys that built Telegram. A lot of people don't know that, but that's one of the reasons it has skyrocketed. TON coin skyrocketed into the top 10 cryptocurrencies, digital assets in the world. I am a big supporter of the TON network. And Dog or Flower is one of the ones I really like on there. That it's a meme coin. It's dog or flower, and it could end up being my play on it is it could end up being the dog whiff hat of the TON network, or the big dog meme coin of the TON network. And if that happens, it's going to be absolutely huge. We pumped up to about $1 million market cap over the last week, and then with this pulled back down $500,000-$600,000. Whatever we're at right now, I could take a quick look, but that looks like a pretty nice entry point to me, guys. I'm going to continue to talk about it. You know how I do. I'm going to continue to highlight it. Dog or flower. I'll put a little over 600,000 market cap. It did pop over $1 million. So that's a nice move there. If that continues. Not if that continues, but if you get in at 600,000 and it goes to back up to $1 million quickly, that's a nice move. That's like leverage trading right there, right? That's one of the nice things about these meme coins. If you get in with a real team, a real community, that you can, it does move like a margin leverage position, but the liquidity, if you have a real team, a real coin, stays. You know what I mean? It's not like you just get wiped out or liquidated, which is never fun. It's not like you're liquidated. All right, so back here to my stuff. World War III. Looks to me like World War III is on hold. That's what it looks like to me. World War III is on hold, guys. I think that all this talk of trying to start World War III before the election, maybe some people wanted to do that. Maybe some people didn't. But it looks to me like World War III is on hold until after the election. I think that they want to give Trump a chance for peace. That's what I think. What do you think? I know a lot of people do, right? They want to give Trump a chance to stop all of the killing, which he has promised to do. It's like anything in life, you know, there's never one side that's all correct and the other side that's all wrong. I mean, in any war, that's, you know, they're both at fault, I think, or well, whatever. They're both. It's a mess. We just need to stop the killing, really. And the two sides don't have to like each other. I've said that a number of times. They don't have to like each other. They don't have to trust each other. None of that. They don't have to. It's okay. It's okay. They don't have to like each other. They don't have to trust each other. All that stuff is baloney. It really doesn't matter. So I am, of course, building. I'm talking to my guys today. We're going to be building out the site, which will have a lot of this stuff on it. But if you haven't gotten yourself a Tangem wallet, you should do it now. The Tangem wallet is it's a hardware wallet. It's really easy to use. I actually here we go, tangem.com. You can follow the link if you're on YouTube or X or anything. I put the link underneath it. You just click the link and it should autofill Impact Money, get yourself 10% discount. But this is a really nice hardware wallet. If you haven't bought crypto, or if you bought crypto and it's sitting on an exchange, that is the wrong place to have it. So it has an RFI chip in there, and then that's your hardware wallet, and it integrates with the app. You do have your keys, so you have your keys. Remember, not your keys, not your coins, okay? And then you have your RFD thing here, and you can get 2 or 3 of these at a time. I would go ahead and get 3. It's a hardware wallet, so you know that's the way it works. You tap it on your phone, put in your code, tap it on your phone, boom, right? Send it out there. You can put 1 in your safety deposit box. You can put 1 in your safe, and maybe keep 1 in your wallet, or whatever you want to do. Okay, as you carry that around. There also is the ring. The ring is very popular. Tangem ring. Experience the future of crypto wallets. So with this one, it comes with the 2 other slim ones. You put 1 in, of course, your safety deposit box, whatever. 1 in, whatever you want, right? And then you have this on your finger. You can take it with you anywhere. They are already working with MasterCard, I believe, and you'll be able to spend your crypto anywhere. But you can easily trade it. I've used it to trade and swap and all those things. So make sure you check them out. Tangem.com. Nice price point with the discount. It's 50 or 60 bucks. Go ahead and get yourself the 3 cards. Get yourself the 1 extra card. I think it's a good idea. Make sure you save your keys. And you're good to go. Not your keys, not your coins, folks. That's the way it works. Not your keys, not your coins. It's Tangem. Beautiful. Also, Coin Vigilante watches. These are American-made timepieces. Beautiful. American-made timepieces. Let me get my correct banner here. There it is. Here we go. Impact money on this one as well. The Coin Vigilante watches are American-made, beautiful American-made timepieces that are inspired by the Bitcoin monetary revolution. I wear one. My wife wears one too. Beautiful timepieces. My man Bitcoin Ben is in on this one as well. Bitcoin Ben. I need to call him again. We talked the other day and then Bitcoin Ben. So he's in BitcoinVigilante.com. Get yourself a 10% discount using code Impact Money. Impact Money. Okay. Now, the one other thing, I'm going to play this again because I played it the other day and it kind of raised some eyebrows for people. So I wanted to play it again here. And this is about the central bank. And I guess they explain it better than me. Oops.
So what is a central bank? A central bank is an institution that produces the currency of an entire nation. Based on historical precedent, 2 specific powers are inherent in central banking practice: the control of interest rates and the control of the money supply, or inflation. The central bank does not simply supply a government's economy with money, it loans it to them at interest. Then, through the use of increasing and decreasing the supply of money, the central bank regulates the value of the currency being issued. It is critical to understand that the entire structure of this system can only produce one thing in the long run: debt. It doesn't take a lot of ingenuity to figure this scam out. For every single dollar produced by the central bank is loaned at interest. That means every single dollar produced is actually the dollar plus a certain percent of debt based on that dollar. And since the central bank has the monopoly over the production of the currency for the entire country, and they loan each dollar out with immediate debt attached to it, where does the money to pay for the debt come from? It can only come from the central bank again, which means the central bank has to perpetually increase its money supply to temporarily cover the outstanding debt created, which in turn, since that new money is loaned out at interest as well, creates even more debt. The end result of this system without fail is slavery, for it is impossible for the government and thus the public to ever come out of the self-generating debt. At this time, the dominant families in the banking and business world were the Rockefellers, the Morgans, the Warburgs, the Rothschilds. And in the early 1900s, they sought to push once again legislation to create another central bank. However, they knew the government and public were very weary of such an institution, so they needed to create an incident to affect public opinion. So, J.P. Morgan, publicly considered a financial luminary at the time, exploited his mass influence by publishing rumors that a prominent bank in New York was insolvent or bankrupt. Morgan knew this would cause mass hysteria, which would affect other banks as well. And it did. The public, in fear of losing their deposits, immediately began mass withdrawals. Consequently, the banks were forced to call in their loans, causing the recipients to sell their property, and thus a spiral of bankruptcies, repossessions, and turmoil emerged. Putting the pieces together a few years later, Frederick Allen of Life magazine wrote, "The Morgan interests took advantage to precipitate the panic, guiding it shrewdly as it progressed." Unaware of the fraud, the Panic of 1907 led to a congressional investigation headed by Senator Nelson Aldrich, who had intimate ties to the banking cartels and later became part of the Rockefeller family through marriage. The commission, led by Aldrich, recommended a central bank should be implemented so a panic like 1907 could never happen again. And in 1913, with heavy political sponsorship by the bankers, Woodrow Wilson became president, having already agreed to sign the Federal Reserve Act in exchange for campaign support. And 2 days before Christmas, when most of Congress was at home with their families, the Federal Reserve Act was voted in, and Wilson in turn made it law. A world banking system was being set up here, a superstate controlled by international bankers, acting together to enslave the world for their own pleasure. The Fed has usurped the government. Now, the public was told that the Federal Reserve System was an economic stabilizer, and inflation and economic crises were a thing of the past. Well, as history has shown, nothing is further from the truth. The fact is, the international bankers now had a streamlined machine to expand their personal ambitions.
It's alive! It's alive! It's alive!
For example, from 1914 to 1919, the Fed increased the money supply by nearly 100%, resulting in extensive loans to small banks and the public. Then, in 1920, the Fed called in mass percentages of the outstanding money supply, thus resulting in the supporting banks having to call in huge numbers of loans, and just like 1907, bank runs, bankruptcy, and collapse occurred. Over 5,400 competitive banks outside of the Federal Reserve System collapsed, further consolidating the monopoly of a small group of international bankers. Privy to this crime, Congressman Lindbergh stepped up and said in 1921, "Under the Federal Reserve Act, panics are scientifically created. The present panic is the first scientifically created one, worked out as we figure a mathematical equation." However, the Panic of 1920 was just a warm-up. From 1921 to 1929, the Fed again increased the money supply, resulting once again in extensive loans to the public and banks. There was also a fairly new type of loan called a margin loan in the stock market. Very simply, the margin loan allowed an investor to put down only 10% of a stock's price, with the other 90% being loaned through the broker. In other words, a person could own $1,000 worth of stock with only $100 down. However, there was a catch to this loan. It could be called in at any time and had to be paid within 24 hours. This is termed a margin call, and the typical result of a margin call is the selling of the stock purchased with the loan. So, a few months before October in 1929, J.D. Rockefeller, Bernard Baruch, and other insiders quietly exited the market. And on October 24, 1929, the New York financiers who furnished the margin loans started calling them in masse. This sparked an instantaneous, massive sell-off in the market, for everyone had to cover the margin loans. It then triggered mass bank runs for the same reason, in turn collapsing over 16,000 banks, enabling the conspiring international bankers to not only buy up rival banks at a discount, but to also buy up whole corporations at pennies on the dollar. It was the greatest robbery in American history. But that didn't stop there. Rather than expanding the money supply in order to recover from this economic collapse, the Fed actually contracted it, fueling one of the largest depressions in history.
Well, there you go, guys. It is a scam. It's a scam. We have to stop it. We will not be free until we stop it. They are in total and complete control. Total and complete control. They have bought out all of our representatives. They have unlimited money because they're able to tax you as much as they want through inflation. They just dilute the money supply. And they can print up whatever they want. I mean, yeah, sure. Their biggest and only client is the U.S. government. But the U.S. government has no control over what they print. So they can print whatever they want. That's why when everyone was like, how did Joe Biden approve this money going over to Israel or Ukraine or whatever it was? How did he just approve it without Congress? He doesn't need Congress. He only needs the central bank. The central bank has bypassed our governments. almost all of them around the world, and they're ruling, and that's why no matter who we elect, we can't seem to get anything to change. That's why the media is completely controlled. That print, TV, we're lucky we're on TV. Thanks to the Smart Money Culture TV network. That's why you can't hardly say anything on social media. Even me, I'm not, you have to, it's a fine line, because I talk about it and I discuss it, but at the same time, I want to keep the platform. If I don't have the platform anymore, then I'm not doing much good, am I? So it's a fine line, and we have to help each other out. When we see other guys, you see guys like Dan Blitzerin, out there talking the truth. You see Andrew Tate and his brother getting arrested 2 or 3 days after they come out and say what the scam is. Who is actually ruling us? Who is ruling us? If you can't talk about him, who is ruling us, right? So it's important that we support each other. You got brother Nathaniel out there as well. Okay. But the monetary revolution, and I've spoken about it around the world, the monetary revolution is the way that we fight back peacefully. And I do want to be clear as well. No one group of people, I'm not against any group of people. I'm not against any group of people. Okay. I've been around the world a number of times. Great life. Been around the world a number of times. And I met people all over the place. And I will tell you that whether you are in the rice paddies of Vietnam, or the palaces of Europe, or the beaches of Latin America, or the high rises of Dubai, everybody pretty much wants the same thing. Most people want a family. They want prosperity, and they want a place that they can leave for their future generations. And that's another thing that this whole Federal Reserve and this central bank has tried and successfully really taken away from people. That's why we need to end the Fed. We got to end the Fed, because you can't even really leave anything for your kids, right? You have the death tax. They take like half of everything. It's unbelievable. You already pay taxes on everything, and then they take it again. The IRS was started the same year as the Federal Reserve. It's all connected. And like I said earlier in the show, if you were watching, the amount of income tax always equals the amount of payment, interest payment, that is due to the Federal Reserve, the central banking cartel. And they didn't even loan us the money. They confiscated everyone's gold in 1933. Most people don't know that. Confiscated everybody's gold in 1933. Roosevelt helped and did it. They did it by executive order. They said they're going to give it back, and they still haven't yet. Your family's owed their old gold. They gave them $25 an ounce for it. Gold is selling for $2,500 an ounce now. They gave them paper money. Here you go. We'll give it back. But they don't want you to have any money, any legacy. You were just here, you're living, you have nothing, and you're happy. You're just a working slave. And that, I am confident, is what John F. Kennedy was talking about. The monolithic conspiracy to enslave all of humanity. And look at us now. We're debt slaves. We're slaves. We can't talk about certain people, or we get arrested. You get too big, you get arrested. We can't even have an election, it seems like. So we got to all speak out as much as possible. We have to, the way to peacefully fight is with the monetary revolution. Get yourself some gold and silver. Go to @costmetals, @costmetals.com. Use referral club code clubs over there. Or you can just go, you can follow my link. I have the link everywhere. Go to @costmetal and go, then you just follow the link to @costmetal.clubs, @costmetal.club. And that'll forward you right over there, or just use clubs in the referral link. Buy gold, silver, palladium, platinum at cost. Get out of the US dollar, not financial advice. I get paid to say all this stuff, okay? Entertainment purposes. Get out of the US dollar. Get into things that they can't dilute. As long as you're holding US dollars, they can tax you. But if you have the money in property, if you have the money in gold, if you have the money in Bitcoin, they're not able to tax that. They can't just produce more gold out of nowhere. They can't just produce more Bitcoin out of nowhere. And if you don't understand how that works, it's okay. You don't have to understand it. Just understand that guys like myself have made a complete career out of it. Life changed our lives. Millions and millions of lives have changed. And I tell you that there's no way for them to make another Bitcoin. If they make another Bitcoin, that'll be a different chain. It'll be like Bitcoin Cash, or Bitcoin Satoshi Vision, or Ethereum, or Ton, or something like that. Bitcoin's always going to be Bitcoin. There's only going to be 21 million Bitcoins. It's actually less because guys like me in the early days, we lost them. We can't ever get them back. I didn't lose all of them, but you know what I mean. We all lost some. You know, they're $90, whatever. And laugh at how much money I paid people looking back to do things. And the value of Bitcoin is unbelievable. Anyway, always a pleasure, guys. I will be back on your TV sets. And Osman, I hear you. I'm Osman in Freetown, Sierra Leone. I am poor, but I want to be rich and smart. Well, my friend, you're in the right place. Keep watching the show. If you're able to trade on our signals, not financial advice and all that good jazz. Glad to have you here. I am signing out.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.